Hey guys, how are you guys doing? Lawahanga City here. Today I'll be doing my back testing. This will be my second back testing video. The last one I've uploaded it last week. So excuse the background noise. Here I'm just putting out my notepad where I write the things that I would like to see on the charts, and there's things that make me take my entries, and how I look for setups during the week. So we'll be looking at gold. This previous week, I didn't really take much trade. I think I only took two. Yes, I think I only took two. So today I might do a short video based on the trades that I've took, because even though I am back testing, but I need to be fair to myself also and be realistic to the setups that I'll be looking for. Because first I want to look at the setups that I would have taken trades on, and then secondly I will back test on the trades that I didn't see, or the trades that I missed. So instead of looking at the 5-minute charts, today I'll be looking at the 1-minute chart. I'll be looking at the 1-minute chart because 1-minute chart, it has more opportunities. It has more opportunities when you are looking for setups. So hopefully the audio is good that side. Hopefully the audio is good that side. So when you see these lines here, these line breakers, is for when I started to look. It's my daily. It's where I start to look at the charts. So this is my daily bias here. This is a 1 day, and then second day, and then third day, fourth day, and then fifth day. The reason why my day starts at 1600, my day starts at 1600 hours, is because I'm using the New York time frame. I'm using the New York time frame. So that is why here it still says Sunday. From here until 12 o'clock, it still says Sunday. So don't mind that. So as we break down our charts, normally I trade the London and New York session. I look at the Asian session to wait for my buyers, but London and New York, those are my go-to places. So our London started 2 a.m. and then New York is 8:30. So anything that happens before 2 a.m., we don't look at the market, we don't do anything, we just observe. So as we're looking at this chart here, we can see that the market was moving up. The market opened, or let me zoom it like this. The market opened here on Sunday, and then it went up, it continued moving, continued moving, and then here, that's when I normally wake up. Here it's around I think 8 a.m. South African time. 8 a.m. South African time. 2 o'clock is 8 a.m. South African time. So when I wake up, I see, okay, price has given me a high. I see my high here. And then now we are going to look for a confluence. The confluence is the conditions that I use to enter my trade. So here I see this low, we ran it, but what do I normally look for in a down movement? I look for a fair value gap. Here is a fair value gap, but price didn't enter here. So if, let's say for instance, let's mark the fair value gap first. This is a fair value gap. Let's say price is like this, no? And then if it happens that we saw this movement here, no? And then we put our entry here. We are supposed to put our stop loss 40 pips ahead of our entry. So let's say maybe I've entered here at 588. Our stop loss should be at 592. 592. So that we can give our entry room to breathe. You see? So some people may say, but the chart went up. No. We first set our stop loss and then we enter our setup. Price when to take this low. This is our first pool of liquidity. This is our first pool of liquidity. The reason why we took this low is because of price went down, and then we see that okay, price took this one. This will be our first take profit. See, so about that, this low here will be our first take profit. This one will be our first take profit. This one will be our first take profit. And then this is the overall movement. So here, this is the move that I actually took on Monday because I wanted to see price, but I only got out of here. I took my first target and then I went out about my day because you remember I only look for 5 pips for 50 pips in an entry. So if it's a $5 movement and then I entered it with 0.10, my target is 50 USD and then I will be out of this trade. So this, yeah, it looks good when you backtest it, especially now when you see that price moved all the way to the downside. It looks very good. It looks very good. So on Monday, we got our setup, and then in New York, I didn't trade because after I had a successful trade, I don't normally go back to the charts, but I'm going to look at it anyway. What do we see on New York? We see that price gave us relatively equal lows, so we mark the last one. As we mark the last one, we are going to wait for a shift in market structure. Shift in market structure is when you are looking for a break. It's like a break of structure. Halt slow, exit. This is our shift in market structure. Now price shows us that it wants to go up. So normally after we see this, even though this is a 1 minute chart, so it's going to move faster. You can pull out your fib, no? You can pull out your fib and then measure this down movement. This last down movement. You can measure this with your fib. and then wait for price to reach 50% area. You see price here went up and came back, and then it respect this 50% area. So you can put your entry here and then target the opposing liquidity. Okay, but here it went for a range, so I don't think this would have been a good entry to take. So if I taken that entry after going in profit here, after going in profit here, and then I took a loss here in New York, so it was not going to be a good feeling. So we do the same thing. Let's mark our 2 a.m. This is our 2 a.m. 2 a.m. is the opening of London. 2 a.m. is the opening of London. 1 p.m. open. So entry moved and then it went up. When price goes up, we go to the New York, to the Asian high. This is the Asian high. Anything that happens before London is Asian session. Here it is. We mark our high as buy-side liquidity. I like to keep it simple, guys, because I don't want to look for things that don't exist in a chart. That's how I started to make a lot of losses in the market, because I started to look for things that don't exist. So as price, this is our last low. We call it market structure shift or bearish market structure shift. See, so price went down and then it came back. Our fair value gap was not mitigated. It was filled, but it didn't hold. So price continued to range and range and range and range and range and range. So some people, they can't withstand this this range here. Some people, and I'm one of those people, I can't handle a ranging market. So let's say I entered here. Stop loss, where do we put it? 40 pips away. And then we target the opposing liquidity. This is the last low that you can see. Let's enter this one first, and then we'll see where we would have gotten our profit. See, so people that can withstand the what you call it, the ranging market, they would have held this entry here. They would have held this entry here if he entered here. And then, what's wrong? We were on Tuesday, nah? My network is pretty bad today, especially when you want to backtest the 1 minute chart. It's going to reload and do all of those stuffs, but bear with me, I'm nearly in there. I want to show you. Yeah, we're here on Tuesday. Sorry about that, guys. We're here on Tuesday. So if you don't mind holding an entry, you can hold it from here till here. It's like, wait, somebody's looking. So this would have been a 60 USD move for us, but it would have taken us 1 hour and 30 minutes. So as price is doing this, you see that already price gave us this low. So me, I would have not, I was not going to enter this because I would have went out as soon as I see that the price is ranging here, because it came in, it got back, it went up, it's like here, and then it went down. I would have went out here. So me, I would have waited for a break in market structure here, shifting market structure here. Why here specific? Let's move this one. Why here specific? Because price already ranged, and then price already broken price already arranged, price already broken this low, and then price gave us another shift in market structure here. So as I see this is a clear trade down close candle. The trade down close candles is a CV, a sell-side imbalance, buy-side inefficiency. So we mark this fair value gap, and then we want price. Remember, even if it's like this, we are not looking for. We already see that price is looking to go down, right? So I am not going to look for the next movement upwards to tap into this fair value gap. No, I just want price to touch this fair value gap. Meaning that if it's like this, I can put on another. Let me show you something that I've managed to learn or teach myself. This is a premium. This is a discount. This is a discount of this fair value gap because it's on the lower side of the fair value gap, right? And then if you want to see another one, I like to do it like this. This is a premium area. I do it like this. I know what I'm looking for in a chart. So as soon as price comes and tests my fair value gap, I don't want price to reach this premium level. I just want price to touch this discount area and then give me a springboard. Just touch and then go down. It did here. Here is it. We put our entry right below this fair value gap. And then we put our stop loss right above here. Right above here. This is relatively equal highs. You see, we know that if price happens to come and push, let's say price went down, came back, went down, and then it pushed, and then it shot up, and then it took out this relative equal height. It is going to pull back on it and then continue going up. But as soon as price broke our second shift in market structure, that's when we got our confirmation that no, price is going to go downward. So here we will have only taken here we would have taken I think it's 40 USD. Yeah, 50 USD. Our target would have been met. Yeah, our target would have been met. Why? Because I don't know how to hold trades. I don't know how to hold trades. So as soon as I reach my target for the day, I bounce. I don't even waste time. I bounce. I bounce. Let me put it like this so that, yeah. So this would have been our Tuesday entry, which happened in London. This is a London session. So let's go look for another entry on New York. So this is the New York session. The New York session starts at 8 a.m. 8 a.m. At the 8 a.m. is like 2 p.m. in South Africa. So that's when I start to look at my charts for New York to see what is price, what do I see on the price. So I look at the last high prior to 8 a.m. Where is it? Here's my last high prior to 8 a.m. If I'm bearish on the day, you need to put context to it. So we had a clear downward movement here. This is a beautiful, beautiful downward movement. I want to do something. This is my new template. We had a bearish market structure shift. We have 3 down close candles. 1, 2, 3. What do we use the middle part for? A fair value gap. A fair value gap. I look for simple market movements, guys. I don't like to complicate my chart. I don't like to complicate my chart. Our draw of liquidity is that low. So if you are not sure where you want to enter, remember in a downward movement, we are looking for discount levels on our fair value gaps. You can measure this area here. You can measure this area. You see already it shows you that already it's showing you that price, it touched the 50% and then price doesn't want to go up. As soon as you see, because this one, it opened and then it went down and then it closed up. As soon as you see that price didn't close above the 50%, you can enter your entry. But where? Not here at the 50%. Below. Why below? Because if you are wrong and then you want to put a sell market and then price continues to go up, it didn't trigger us. So we put it below and then our stop loss, you can count. You can count. You'll see it. You'll see it. You can count our stop loss. You see, three and a half pips. Yeah. So it's like, yeah, $8 stop loss. And then what are we targeting? We are targeting this down close, this last low angle where there is a double bottom. So we know that price is going to look for a buy where it last bought. So we are selling price to go to that to take out those buyers. And this is a $80 move. This is a $80 move. I like to use fair value gaps, shifting market structure, up close candles, which is an order block. Like buy side liquidity, let me do it right. Buy side liquidity, shifting market structure as price went down. Look for 3 down close candles. 1, 2, 3 is my fair value gap. I look for 50% of that fair value gap or a midpoint range. Here is it. And then I put my entry right on the start of the fair value gap on the bottom, and then I put my stop loss right above of the buy side liquidity, and then I target where I see retail buyers will want to go back and buy again. I keep it as simple as possible because I know that price doesn't move the way I want it to move. Let's go on the third day. London. Remember, what are we looking for? Last down, last low, last low prior to the open of London. Last low. Here is it. This is the last low. Even if you put the line chart, you can see it. Last low. And then down, up, down. So what do we call this? We call this a Judas swing. Price went down only to push price up. And then here, what do we see? We see 3 green candles. This is an indication that we are ready to move up. 1, 2, 3. We mark what? The middle candle. We mark the middle candle. If you like assurances like me, as price continues to come down, you don't put your entry. You wait for price to go up to show you that it indicates that price it continues to go up. But some people will see this as a bearish order block and enter on it. Me, I like peace, guys. So I was not going to enter here. I was going to leave it. And then as soon as price close above here, I was going to put my buy stop here. Put my buy stop here. What are we targeting? This. Low hanging fruits. Because I know that I can't hold a trade. So low hanging fruits. Low hanging fruits. So here is it here. We can see that here we had a sell side liquidity. We had a condition number 2 is you want to see price coming down. Okay, let me start again. First condition, last low, here is it. You want to see price coming down and take out this low. It did. We want to see 3 bullish candles. It's an indication of a buy. 1, 2, 3. It did. We mark the middle candle. We mark the middle candle. We did. As price goes down, we want for price to stop. We want to see the last candle closing above here. We see it and then we put our buy stop. Even if price goes down, we know that we had our condition here, we had our sell side taken here, we had our 3 green candles, and then we are looking for price to go down because we're going to put our stop loss right below this entry, so that even if price continues to go down, we know that we're not going to be affected. We're going to take our loss for the day. This is our pool of liquidity, this one. And then it would have been a good entry. It would have been a good entry. Let's see how many pips it would have been. This was a $3 move, so 30 USD. 30 USD would have been a good start for the day. And then let's go to New York. Remember New York, we start our at 8 o'clock. 8. High, low, high, low. So here is our first condition. Our first condition was met here. This is our bearish market structure. Bearish market structure. We see 1, 2, 3. 3 black down close candles. The black is the bearish one. So And then if you don't see a fair value gap here, if you don't see a fair value gap here, what do? You mark this displacement. You mark this bearish candles. You measure them. You measure them. You measure them. And then you're going to look for the level of 0.62. 0.62. These are ICT settings, by the way. There is a video where he shows how to do them, to use the sweep settings. So you would have entered here on the 0.62, or even at a 50% level, it would have been a good entry also. At the 50% level, it would have been, because here is a deep premium level here. It's a deep premium level. So let's also get a screenshot for this one. So here we would have had two entries. Let's see our target for this one, because the first one it was 30 pips, this one is 30 pips, 60 pips on the day. Our target would have been met. And then you see again, we had at the low, we took our last low here. This is a bearish displacement, 3 black candles or 3 red candles. You measure this downward movement, you look for 50% or 0.62, and then you enter the 0.62 or 50% area, and then you target the last clean range here. It would have taken us how long? Let's see. Less than 30 minutes. Less than 30 minutes. So on Friday, I didn't look at the charts. I didn't look at the charts on Friday. This is the PM session. On Friday, I didn't look at the charts. Yeah, I was busy on Friday. So I'm looking for 12:30. I mean 2:30. Sometimes you can wake up and see the market has already left. Me, usually when I see that price has already left me, I don't even bother watching at the chart, because I know that my emotions are going to get better of me. So here price left us, and then you can go to New York. This is a bearish last low, sorry, high. It took out this relatively equal highs, and then it went up a little bit, and then it came down. Remember what did I say? If you don't see, even if you see a 1, 2, 3 candles, but I don't know how to measure fair value gap where there's a gap. I don't know how to measure it, but it still gives us what we are looking for. And then you pull out your fib. Sorry for going longer than 30 minutes if you are watching. I like to keep it at 25 minutes. Remember what did I say? I look for 50% levels. Why? Because 50%, it's like giving me an assurance that price might continue to go down. And then where is our target? And then maybe I might do another video where I show you how to take your profit using a fib level. Like how you measure your fib to take your profit. I might do it, but I just need to backtest it myself first so that when I put it on my YouTube channel, it also helps another person who wants to learn how to trade using the correct channels. Low, displacement, up those candles, 50% tapped. We put our entry right at 50%. We put our entry right at 50%. Stop loss above here. And then we target this. Yes, I'm going to make a video where I show you how to calculate your take profit using a fib level. I'm also learning, so you have to bear with me on that one. So if sometimes we don't see a fair value gap, you measure that downward movement if you're looking for a buy after the break of structure. It has to be aligned with what you're looking for in the chart. If you see a down movement but you don't see a break of structure, then you don't measure it. But if you already have a relatively equal highs, you had a swift down movement, that is a bearish market structure shift, and then you measure it, and then price comes and continue and respect this level, and then it comes and take out your TP, your first TP, and then your second TP, you will know that, okay, I'm on the right track. So sometimes people, you want to do things that don't align with what you're looking for in the chart. So this was a $60, $70 move. Would have been a good move. It would have been a good move, especially under 13 minutes. Wow. I like this one. I like this one more. It was on Thursday. I like this one. It seems like it's a new candle. The way it's moving, it has to be a new candle. This one, it has to be a new candle. I like to backtest the moves that I know that I would have taken. So if I don't see another move, and then there is another move that somebody has spotted, it's okay because I only look for the moves that I know that I would have taken on the day. Yeah, on Friday I'm just going to look at it, but I didn't do anything on Friday. I don't want to lie. I didn't do anything on Friday. I was busy with some stuff. We had electricity outage, so yeah, price moves. Let's see in New York what happened in New York. 8. And then we had a clean move here. This is a very, very nice move. This is a very nice move. For those that who want to ask, why am I using this high and not this one because I set any high before 8 a.m. is because we measured this high. We measured this high, né? And then price came and took this high and then went down. It didn't take this low. So this high is no longer valid. So this is a new valid high. So as price went up, it took out this high. As price it continues to go up, we want to see this low that gave us this high now being taken. It was taken here, even though it's like a short movement, but it was taken. And then we look for up movement. We don't have any favorite gaps. Come down again, displacement. We have another shift in market structure here. This is another shift in market structure. This is another shift in market structure. Price went down. We look for how many candles? 1, 2, 3 prior to the shift in market structure. Here's a small fair value. small favor here. We enter right at the bottom of it. We put our stop loss above this relatively equal highs. And then TP1. See how much or how many pips. 47 pips. Not bad. Yeah, so that was my back testing for last week's price action. So 1 minute, to be honest, it runs fast, but it has many trading setups. So if you are a short-term trader, like you like to scalp, 1 minute chart is your time frame, or 15 or 5 minute chart is your time frame to use for trading. And then yeah, you can learn from there. And then I'll post another back testing video next week with the FIP settings that I've spoken about, because I want to back test them in the following week so that when I post my video, I know what I'm talking about. So thanks for watching. Hit the like. Don't forget to subscribe if you like the content. Till next time. Take care.